Hey, good morning. Happy Friday. Today is February 5th and spring is in the air. Yeah, I love it. Hey, the word out today, the jobs report, always the biggest report of the week when we get those. And was it a good report? Was it a bad report? That's the really interesting question because the consensus was that 190,000 jobs would be added, and it was only 150,000. So that's not good, right? And then December's numbers were revised downward 30,000 from what the original estimate was of jobs added. So that doesn't sound so good, right? But the other components that were in that report was that the hourly wages rose. Now that's a big deal. That's something that the Fed is really looking for. Is an increase in wages to signal an economic recovery. So that was an important factor in that report. The other thing is that the labor petition easy for me to say, labor participation rate actually improved. So that's another thing. You see, you're always hearing, well, unemployment, it's at historic lows or it's way down, 4.9%, I think was the number that came out today. However, you'll hear other people talk about the labor participation rate, which is the worst that it's ever been. And that essentially is people that are not working and not looking for jobs. And so the true number is supposedly around 10%. And as I've stated before, with a lot of part-time jobs and lower wages, that's been the other key component to the real jobs numbers. Now, that was part of the other news that was added was that the average hours worked was also up. And as I said, the income was also up. So, mortgage-backed securities were way down early on the report, looking at it as very positive. They've recovered somewhat, currently down 12 basis points at the moment. And as far as the Dow Industrial averages, last I looked, they were down 150, looks like 159 at this very moment. So very interesting because we're trying to determine really what the Fed's going to do, but not only what the Fed is going to do in terms of whether they'll continue to ratchet up interest rates or not, but also how is that going to affect the overall economy. For example, when it comes to Wall Street, you may have some positive data come out that would normally help the value of stocks rise, thinking that it's positive for the economy. However, if they believe that the Fed is going to increase rates and that then is going to slow the economy, well, that might not really be looked at as good news. It's about as clear as mud, isn't it? And with that note, I will leave you. Have a fantastic weekend, and we'll talk to you next Friday. Cheers.